What is going on YouTube? It's Brendan from Market Makers. Did you guys see the action-packed press conference yesterday with Fed Chair Powell? Just kidding. Man, his ability to answer questions and speak, you can tell he's so tightly wound. I don't even think he believes the bullshit that he's saying. He has to stick to a very tight script in his head, and he doesn't look comfortable. He looks very uneasy, not very confidence inspiring. But guys, in today's video, we got to cover the targets and the assets that I'm looking at specifically for potential short opportunities when this market decides to roll over, which will be very soon. Earnings season is coming up, basically really kicks off hardcore in April. Okay. So we're going to go over the pivots. We're going to go over the assets here. I have Bitcoin. I have the indices. I have the French 40, the German 40, gold, silver, and a couple individual stocks as well that I like that I'm targeting, Nvidia and Tesla. Okay, going to go over all that in this video. This video is going to be brought to you by SimpleFX. If you guys want to trade these assets on a decentralized exchange, you can trade all of these assets, and you can trade them all in a stable coin, USDC, USDT. If you are in an unrestricted country, which is the vast majority of the world, you could even trade in fiat if you want to do the KYC process. But for everybody else, all those details are in the video description. You need a VPN if you're in the US or UK or Canada. All that's in the video description, and you do get up to a $5,000 instant bonus when you deposit on SimpleFX. Again, decentralized exchange. They cannot trade against you. If you want a normal crypto exchange, because that's how you came up was on crypto exchanges, check out BingX. No VPN needed. We have an $8,000 Market Makers tournament exclusive to our link going on, and you can join that. It's only been, I think today it is the actual first full trading day for it. So not too late to join. And the top two prizes, guys, are basically cash. You can withdraw it from the exchange if you win. There's a leaderboard and everything, so you can see your progress, check out how it's going. And so check out our sponsors, help support this channel. A lot of my videos are demonetized because we play clips too much. So anything you guys could do, like, subscribe, all that fun stuff. But guys, let's talk about a couple things Pal said, and let's get into the macro here. And the micro. So Powell tried to play the role of a dovish hawk. What does that mean? He took out a lot of language from previous pressers, right? He took out the language of future rate hikes and he replaced it with additional policy firming may be needed. You know, this is all legalese, legal speak. It's, again, bullshit, okay? So what he's really trying to say is, we don't know if we broke the economy or not. The banking system's a prime example of the second, third largest banking failures of all time that have just happened in the last couple of weeks here in the USA. We don't know if we broke anything. So let's not say we're raising rates, but we can't say we're pausing, because then the market could A, be extremely fearful, because what does the Fed know that the market doesn't know, that they're seeing behind the books that really makes them scared? And B, inflation is still 6% on the CPI, which in reality means it's like 10 or 15%, right? Anybody that goes out shopping knows this. But this is where the Fed's at, between basically a rock and a hard place. So he tried to play it both ways. The markets sold off yesterday. Today they regained a lot of what they sold off. So this is where we are now in this process. And April has earnings coming out for the equities markets, and that's going to be interesting, because if it's bad, and certainly if the financials being first, the big banks, they should be giving some very interesting guidance. And I think it's something that can really affect the market, and it could really help this cycle to play out just like .com. Okay, so let's go ahead and jump into the charts. Oh, wait, one more thing. Recession risk. So let's talk about UK. So Lee, throw up that article I gave you. Guys, in the UK is our third largest viewing country here for this channel. You guys had a surprise inflationary spike up to 10.4%. Remember, I think it's your finance minister, I think that's his title, Jeremy Hunt. Didn't he just a week or two ago say that you're not going to have a recession? You narrowly missed a recession. Well, all the articles today are saying that you probably will have a recession. I'm here to tell you, you will 100% have a recession, okay? Well, let's be fair. 99%. Got to give you 1% chance for an out. Why? Because you have 10.5% inflation and your central bank funds rate is 4%. You to be restrictive on inflation, you actually have to be above the inflationary rate. So again, all the central banks are doing a dangerous gamble. Let's just get it up to 4%, 5%. The US is now at 5%. And let's just hope that it can slide underneath the inflation rate. Then we're restrictive. But in the meantime, who does it hurt? It hurts everybody living paycheck to paycheck, which I don't know those statistics in the UK, but in America, it's 64% of people live paycheck to paycheck because we pay higher prices for everything. So I can tell you, Jeremy Hunt is going to be wrong. German inflation and French inflation both surprisingly went up last month as well. Maybe that's because the ECB's rate is at 3% and you have 8.5%, I think, average inflation in the Eurozone. So that's a problem. Okay. That's a big problem. And that problem is bared by everybody watching this that lives in those countries because your cost of everything is manipulated by inflation. And the target inflation rate, I've said this before, of 2% is made up. They say it on TV like it's been around for 100 years. Ben Bernanke made it up in 2012. The worst Federal Reserve chairman in U.S. history made it up in 2012. 2% is a good number. The idea is if you know inflation is a stable rate of 2%, you expect the cost to rise. Okay, you expect the cost to rise. And then the ideal situation is employers would then be forced to give you a 2 or 3% pay raise every year. Everybody here that has a job knows that's not true, especially in hard times. But inflation being at 2% makes everything cost more. And the other idea, in philosophically speaking, in economics, is if you know your phone is going to cost more next year for the same model, which obviously they come out with new models all the time, but if you know it's going to cost more, then why not buy it now? So it forces you to buy things. And in the US, we're a consumer driven economy, something like 70% of the GDP. So that's the philosophy behind it, but it was made by a complete moron who actually won a Nobel Prize. The guy that collapsed the global economy won a Nobel Prize for economics. You believe that? Believe it. It's America. This is this is how things work here. If you're incompetent, you can be president and corrupt, and you can win a Nobel Prize if you crash the global economy. I mean, it's quite a country, guys. But a couple things I want to show you. Lee, throw up the recession chart. You guys have seen on the business news talking about, well, guys in suits and ties that look really proper. Like, I used to work at Merrill Lynch and you see all these guys walking around, guys in suits and ties that seem like, they have their Harvard degrees or Yale degrees in economics and chief economist for some firm. And they say, well, the unemployment rate is clearly too low, where our base case is not a recession. As a matter of fact, Brian Moynihan, my old boss, the CEO of Bank of America Merrill Lynch, because I was at Merrill Lynch in the GFC when it collapsed, days away from going bankrupt, and they bought us. Um, he actually said just 2 weeks ago, just a few days before the Silicon Valley Bank collapsed, he predicts a recession so soft and so light that the average person won't even know. I bet he's going to regret saying that because, of course, that same week, Silicon Valley Bank collapsed. A couple days later, Signature Bank collapsed. Second and third largest bank collapses in U.S. history. But these are the brains in our finance sector, okay? So you hear these guys saying this unemployment is too low. Take a look at the chart. I'm ranting too much. Take a look at the chart. Unemployment peak cycle, meaning low unemployment, okay? Peak cycle for unemployment is always at lows before it spikes up heavily. That red line is the recession. So they don't even understand, and I'm talking about mainstream media, influencers on YouTube, influencers on Twitter finance. They don't even understand how to read charts. This data is all out there and very easy to see. We were at 54-year low unemployment when we had 3.4%, which is now 3.6%. It's always at a cycle low before it spikes up. And it spikes up when the recession is hitting. It spikes up when the recession hits and then goes parabolic after the recession. Why? Because economic damage happens on a lag, just like federal rate hikes, okay? So I know a lot of people in today's day and age with the TikTok and 30-second videos and shorts, they want everything to happen now. What we do on this channel is talk about what's coming and when that could potentially happen. Economic things outside of an actual parabolic crash take time to unwind, okay? You had decades of free money Free money, 0% interest rate since basically 2009. So more than a decade of free money. It takes time to unwind, but with Fibonacci and advanced trading concepts, we can see where this potentially gives us high probability trades because trading is not about certainty, it's about high probability. All right, so now we'll get into the charts. First, let's check the VIX. VIX spiked up, as you can see in the caterpillar, and it came back down. It's staying above the 50, guys. 50 simple moving average. Why is that important? Because when it gets above the 50, you can go parabolic and you can really explode like we did during the pandemic. So staying above the 50 is key here for upside on the VIX, which moves inversely to the S&P, the largest market, 34, $35 trillion market cap. So if this stays elevated, especially when it spikes, that's when you see pull downs happen in the market. And of course, the .com pattern, guys, this green line, spring equinox, and .com, that weekly candle gave us our local high on this double top before we rolled over. Look where we are here. So the green line would be right on top of this candle. The weekly candle we're on now, March 20th, was the spring equinox. I didn't want to cover it so you could actually see the candle. Okay, let me open this up some. So you can look at this a couple different ways. You already have this disjointed double top here, but because this is weekly, you also have a double top that formed here. As a matter of fact, today's or yesterday's candle that went, not parabolic, but spiked up when Powell was talking, it got to this 618 retracement from the high. So again, you have a 61% retracement. You could be forming that double top. If this pattern plays out, next week's candle would be lower. Okay, if it goes candle for candle, which I'm not predicting it goes candle for candle, but the actual pattern, the rally patterns did go candle for candle. So we'll see what happens here after the spring equinox candle. You got rejected at the 618. This is the E-mini. This is not going to be the same price as some other assets that you may be trading on the S&P, okay? But this is the E-mini on CME. 40.67 is where it got to at the 618, got rejected. Could they try to jam it up to 41.29 and give you a clear double top? They could. We still have tomorrow as a trading day. Next week's interesting is basically the last week of March, and then earnings will be coming out. So could we see some sell programs kick in and de-risk? Okay, I think when you think about the biggest banks, JP Morgan, who has Marko Kolanovic, Hall of Famer, strategist, 12-time Hall of Famer, has the S&P going down to the low 3000s. Obviously, everybody knows who Mike Wilson is. He won the Best Strategist Award last year, predicted the whole bear market, has S&P going down to 3,000. And then you have all the other various people that you guys know that we track, or when Scott Miner was still alive, tracked him closely, Jeremy Grantham, Ray Dalio. Everybody has the S&P coming down to the average down here, minus 34% of where it would trade in a recession, which on my charts is about 3,100 to 3,400, okay, in that 300-point range. So this will be key to watch. Let's go ahead and click through some charts. And on the weekly time frame, we are compressing for a move in the S&P. Again, this could be a rainbow up and then down, or you could just start failing here. You're just below or just above your weekly 50. Again, the spring equinox, as you can see, you're right on it. Let me delete the line. So you can see you're just above your weekly 50. You could draw a trend line here and see where you're topping out as well. You're holding that trend line from the all-time high here, but break this trend line, and this is your 200 on the weekly time frame. You see that? So this is a very precarious situation to be in. If you get below that trend line, guys, this is dumping and pulling down. That trend line is roughly 37.50. Okay, that's why it's a key area on the weekly of support. Looking at this on the daily, it's going to make this our famous line chart. See us a little bit better. That 45 angle that we drew, I mean, geometric trading concepts, guys. Beautiful, beautiful 45. Got rejected on it yesterday, as a matter of fact. Tuesday. And then yesterday we sold off. So Tuesday we got up there, sold off, and now we're bouncing back up. And you can see on the line chart, sometimes I like using line charts because you can see shapes very easy, right? Distribution box up here. You can clearly see you're printing a double top here in the line chart. The question is, will this push up at all? Try to retest the 45 again, which is roughly 40.10, 40.11. Really 40.30 is what you want to watch because I think that's where you got to on candles. Yeah, you did. You got to 40.30 just above on the wicks, okay? So you want to watch that area to get a complete retest, but you're making a nice double top here below the 45, above your daily 200. Again, that 43-day pivot, guys, April 14th. we could be in a sideways situation or get slightly bullish till April 14th. Why? Because we have earnings coming out, but I'm tending to think, again, looking at the dot-com pattern, what I would like to see here, because our 43-day pivot gave us a top, gave us a local bottom, local high here, then a sell-off, local high here, then a sell-off. So these 43-day pivots are tracking super, super accurately. If we start breaking down, the breakdown can happen fast to really get you down on that April 14th. And again, if you look at the pivots, it may not be the high or the low. So in other words, you could continue to go down lower. But this is really key to watch because they've been critical points for trading purposes anyways, where you can get nice trades out of. And I want to see if we start breaking down next week. Be interesting to see how the market plays Friday, if we go bullish or start selling off this gain we had today. Looking at the S&P on the daily, again, that 45, you can see we got above it, got rejected, closed below it. Trend-based fib here, guys, using this on the daily time frame, October 13th, if any of you want to lay this out. December 13th, October 13th, that's a Fibonacci number, and December 22nd. You see this? So this gives you your trend-based fib, and you wicked just the 382, just slightly wicked above it there at 40.12. So 41.66, where we took our short at 41.80 to catch this decline, kept this fib in place because it's been laid out beautifully and it's been respected, okay? So if we were able to flip 40.12, you're looking at 40.80, but again, I'm looking more at the shape that's possibly being printed here, holding the 200, which is very precarious to hold that 200. That's 39.33 right now to the dollar here, okay? So 39.33, and if you print a double top here and break down, or you just break down for whatever catalyst enters the market, such as another bank failure, then you're going to be coming down and you're going to be sweeping these lows, in my opinion. And the market can descend 3 to 5 times faster than it rises. So you can make up a lot of progress here to the downside on the S&P. Bitcoin got up to whatever 24, 28. 28.9 almost with the Powell comments yesterday. As you can see, we hit the FOMO phase and we definitely got our FOMO rally. Let's look at this a little bit more zoomed in. Guys, again, the reason I'm not in this decoupling camp, a couple of reasons. One, I think it's detached from reality because you can't have a 95% correlation with the NASDAQ. 95%. Look at the movements. Double bottom, move up. Double bottom, move up. You can see the spikes make their all-time high a week apart from each other. You cannot have a 95% correlation and say that Bitcoin is detached from the equities. What this means is when the NASDAQ rolls down, Bitcoin will roll down. If the NASDAQ rolls down and Bitcoin doesn't roll down and Bitcoin moves inversely to the NASDAQ, then you could have a base case for saying, hey, everybody's fleeing to Bitcoin. They think it's a great asset. I can tell you right now with very near 100% certainty, because they say it all day long on TV, the actual money managers from firms like Bridgewater, the largest hedge fund in the world, view Bitcoin as fintech, okay? Financial technology. That's why it tracks to the NASDAQ. So when a NASDAQ rolls, Bitcoin will roll, okay? And if the NASDAQ pumps, remember, Bitcoin moves at a higher beta than the NASDAQ. That's the key. It moves at a 2 to 2.5 beta. So let's just measure this real quick before we get into the weeds here. Let's take this rally off of the November 9th. November 9th, 86% off that November 9th low. Do you see that? 86%. That was the extreme low. And then you had your, where's your October low? Your October low was over here. So 86%. Let's just look at what the NASDAQ did. Let me find it here on a daily because your rally started back here October 13th. So you're a few weeks apart from each other. Okay. Again, not candle for candle. And you got up to a 25% rally. So the Bitcoin basically moved at a 3 beta. NASDAQ, the exact same double bottom pattern, went up 25%, and Bitcoin basically went up 85%. So let's just say 3, whatever that is, 3.2. So basically a 3x beta. So in other words, if the NASDAQ gives up this pump, which I do believe it will, and go to a new low, then multiply what Bitcoin could drop by 2 or 3. And that's what I'm talking about, okay? So we'll have to see how that plays out. Let's go ahead and look at some Bitcoin charts though. So what I'm looking at here, guys, again, this is the fib we've had laid out now ever since we made this low November 9th. And it's been tracking beautifully, right? I gave you this drop here of 13.5%, this much larger drop of 20+%. This was the Kepler triangle trades. And then of course we made a bottom, bounced off the 200, just like the NASDAQ, by the way, guys. The only two assets that did that, bounced off the 200 and went up. And now to me, it looks like you're starting to print a distribution box. This could flip into accumulation, but you guys know you have steps you have to do to flip this into accumulation. You have to get back on top of your trading range. We'll look at this in the 8 hour because you have more candles, but you'd have to get on top of your trading range and then pivot out to the upside, just like you did here. Okay. You got on top or up towards the top of your trading range and just shot up, basically a spring action, if you want to be technical, down here off of the 200. But this looks like it's printing what could be a distribution box. We'll see how this plays out. And again, this isn't moving much because the NASDAQ's not moving much. And let's see what our money flow and everything says. You're almost overbought here on the daily, or you're technically in the overbought area on the daily. And let's look at this on the 8 hours. You can see this a little bit cleaner. What am I talking about? I'm talking about this. So your rise up, okay, here's your pullback, your rise up, your Livermore pivot, or your back up, you could call it. And here you go. Here's your buying climax candle. You made a base. You can see you retested your ceiling, got some up thrust. After up thrust, you get signs of weakness. Came down and made a down thrust, a sign of strength. Made an up thrust. Again, this is 8 hour time frame, okay? And this is a mini cough structure. And now you're trying to stay up on the top of this range. For Bitcoin to get more bullish, again, Bitcoin moves much more parabolically, but you guys have seen me draw this in the commodities and equities very, very often when I find them. And you would pivot out to the upside. So you'd roll up, hit some type of resistance, pull back. It can happen higher up at a higher level, but you get this pullback type look, okay? And your pivot out to the upside. Right now, you're ranging, trying to work off an overbought condition, but I'm telling you, if the NASDAQ starts to roll, which is why next week's going to be so interesting, because if the S&P rolls, the NASDAQ's rolling, the Russell's rolling, everything's rolling, okay? Bitcoin will roll when the NASDAQ rolls, but just keep this in mind when you're looking at your charts. My upside target, by the way, for Bitcoin, if we got more bullish for whatever reason next week, I still have that 31,180. Until then, the 1618 was at 27,821. Obviously, you got above it, below it, above it. So you're ranging right around that 1618. Okay. And if you start to lose this, if you start to see, because you that with yesterday's candle, you've made this what could potentially start being a double top. Okay. You're making a dragon pattern here. And you really want to watch 26,264, 25,180. That's back to the ceiling of whence you came. Okay. So if Bitcoin does start getting weaker, if the markets start rolling, you want to see it hold 25,180, or you're back in this range. And this range goes all the way down to 15.5 on the daily time frame. So let's move forward. Looking at the NASDAQ on the weekly again, here is your spring equinox. That's your weekly candle. And on the weekly time frame, your 50 is about to cross your 200. If the NASDAQ starts rolling over, it gets you your death cross, okay? And you can see here, you printed a nice double top where you get more upward momentum. You're getting rejected at a key level. We'll look in at a more zoomed in level, but I want to show you the downward projections for the NASDAQ, why I'm in short in the NASDAQ, actually, that I posted in the Discord this morning. And let's go ahead and look at this, because what I did, guys, you guys know my Dow theory Fibonacci waves methodology, and this video is already long, so I don't want to go into it, but I made our fib wave projection here. You can see that we already hit the 486, right? And this would be your first phase. Your next phase would be FOMO. So Dow theory, key concept in a three-phase bear market, you enter the next phase essentially when you break the previous lows and make a new low. This is all phase one, okay? This is all phase one here in Dow theory. So it's going lower. Obvious target to me is a 786. I would say 9,200 to 9,500, because you almost hit the 618 within a few hundred points. So I think you're easily going to take out this low. When this thing pulls down, which is going to happen, I do believe in earnings season. Like I said, the latest time for a trigger for a sell-off, according to the pivots, which the NASDAQ's also moving at a 43 to 46-day pivot, is April 14th to April 18th, okay? But the way it's building these bearish patterns, unless you get some bullish catalyst, I think you're going to start seeing selling. And that's the target. So if you talk about what Bitcoin could do, right? If we just take this from the high, you're looking at a 28% move, 29% move. Let's just round it up to 30 for easy math. If Bitcoin moves at a 2% beta, it's dropping 60%. It's going to get you right back down close to that 15.5. If it moves at a 3 beta or greater than a 3 beta like it did on the rally, you're sweeping your 15.5 low. Okay, just important concept. I'm not telling you it's definitely going to happen. In my view, my TA, it's going to happen. Okay, it's going to sweep its low. But this is just, educational purposes. I'm just showing you guys how I'm viewing the market. I've done very well in this market, as the people in the Discord can attest to, with the trades. This is the best trading experience of my life, trading in a bear market, high volatility. You get a lot of trading opportunities. Looking at the 3-day chart, guys, here on the 3-day chart, you can see this is the resistance I was talking about, 12,950, which again, this fib is aiming towards the downside, but it's a 618, and we got rejected here on the 3-day chart, and we're staying rejected. But the larger picture here on Wyckoff, clean that up. You've been in this Wyckoff trading range, right? Here's your attempt to defeat the bear market, failed, came back down, and now you're printing what could end up being a massive double top down to the downside, okay? If this starts breaking down, which as of right now, it's early to tell. It's one candle on your second part of your double top, again, 3-day chart, but that's what it's looking like. And of course, you can see you got overbought here. So you have bearish divergence on your MFI on this rally up on the 3-day chart, bearish divergence. Looks like price wants to roll, barring outside catalyst. Here on the zoomed in view on the daily, Wyckoff laid out the same way. Your 200, notice how you bounced off of it, just like Bitcoin, right? Actually, this video is already long. I've been making some long videos, guys. I'm sorry, but let's just narrow this trade. So 11%. Let's take it from where Bitcoin bounced off the 200. The NASDAQ went up 11%. I just want to be really accurate with this, because I know people love to debate me about Bitcoin stuff, and I'm not a debater about this stuff, guys. Like I told you, I don't have a personal bias for Bitcoin to do one particular thing or the other. I don't care. I just want to trade these moves. So NASDAQ went up 11% off of the 200, and Bitcoin went up almost 50%. Okay, so basically, guys, you moved at essentially a 4 beta. Okay, so just keep that in mind. If that tracks true and Bitcoin's at a 95% correlation, you moved at a 4 beta. So the idea to me that it's holding 15.5 if the NASDAQ goes down to 92 or 9,500, and again, doesn't have to. I can't make price do anything. I'm telling you what I think's going to happen based on the economy and the economic indicators that we see here in the marketplace. Okay, so Bitcoin basically moved at a 4 beta. Now, you can see on the daily, we're stacking candles, potentially making a double top, but we're also near the top of our Wyckoff. This is always a trick, right? You're getting up thrust. You're also near the top of your Wyckoff. If we were to try to move up a little bit more, I have 13,253 here, which could be a potential target to get to. But again, you're getting a lot of supply dumped on these candles. And historically, all through last year, as you can see, all through June of 2022, you didn't have a lot of success other than this one spike, which just fell down hard. This one spike, which is up at 13.6, six-ish, that you got up to. Other than that, this area has provided excellent opportunities to give you nice trades. And that's where we are right now. So I put a trade on in the room, shorting the NASDAQ. We'll see if we start getting our decline. Look, that first move down, really, you could bounce around in here, obviously, but really looking to see if the 200 holds, if we do come back down and back test it, because essentially that's going to be close to your neckline for that double top if it comes down. Okay, let's go ahead and look at the Russell, I have it in this trading range. Again, we nailed this trade, guys. We got in at 1988 to 2000. This thing fell apart. Stacking candles, trying to accumulate. The Russell has a lot of regional banks. Regional banks are under pressure. So I'm not interested. You can scalp in here, day trade in here. And again, we have professional traders on our Discord, guys, that do intraday trading in and out. So you can find these trades in here for the Russell, but it's in a tightly wound range right now. Pretty beat up, around 1732. Gold. All right, so let's get into gold really quick. And I still have you Europeans out there. Hold on to the end. I got the French 40, German 40, and Americans and everybody wants to see NVIDIA and Tesla. It's all in the video. But looking at gold, okay? Again, I've went over this, but all the way back to August of 2020. Everybody you hear on TV, on YouTube, that is gold bulls. And like I told you before, I like Peter Schiff. He pumps gold hard. And everybody's saying this is a silent bull run. It's going up. Hey, it could be. But I'm looking at the chart going back 2 years. 2055, as you can see, my 1618, 2055, sold off, dropped 25%. 2055, sold off, dropped 25%. The market likes to move in threes. I'm thinking if we get up here and repeat the .com or the GFC cycle, which again, Peter Schiff's argument is you're not going to repeat that because gold had a big run up, in his opinion, into the GFC, so it sold off. I'm looking at this. Bank failures. Did we have bank failures in the GFC? Yes, we did. Bear Stearns and Lehman Brothers. And then we bailed out a bunch of other ones, or other ones got consumed by other banks. So Bear Stearns and Lehman Brothers. We had bank runs. The banks sold their metals. We are at the precipice of having multiple bank runs and or debt crises and or equity bubble and or real estate bubble. Could gold parabolically go up? Like I said, flip 2055. Give me my Livermore pivot. I'll trade it up here. Okay. Why? Because I don't care about the $55. I would rather have this trade because if we just come up and make one of these spikes, I'm shorting it. If the markets are tumbling and gold starts showing weakness, I'm shorting this because I would have gold going much lower, potentially to that 1500 range if everything starts pulling down. Okay. So this is just an in-between area. Lots of supply gets dumped here at this area, which is why you got rejected at 2001. Next level is 2023, but the golden level, pun intended, is 2055 at 1618. You have to flip it and hold it and move up for me to be interested in longing gold. And guys, again, small profit. You know, Nicholas Darvis, who took a couple $1 million out of the stock market, this is in 1950s dollars, but he made it in, I forget what he did, 2 years, 10 million in 2 years, 2 million in 10 years, whatever. It's a lot of money today. But one of his quotes was buy high and sell higher. Okay. For me, gold has to prove itself because what it did here, it can easily fall apart. It's at the same level. It got rejected at 2000 already. Needs to flip 2055 and move up. If not, starts making a bearish structure or just gives me some type of huge volume spike or something. It gives me a big supply wick. It's potentially an excellent short opportunity. Silver, same thing, guys. Trend line goes all the way back, same time frame, August 2020. Easily, these have been awesome trades in silver just based off of a trend line. You don't even need fibs to look at this. Every time you hit the trend line, get some chop. This was a big wick, but every time you get fibs up here, trend line and price up here, you just fall apart. Retest it, double top, fall apart. Retest it. This is where we shorted it, 24.41, fell apart, 20+% move in silver. Excellent trade. And now we're pumping back up. Watch 23.42. Watch this 786. It's kind of your breakout level. You got to flip 786 at 24.27. Get on top of it and move up. Okay. Then I'm interested in silver. Break your 2-year downtrend. Everybody says this is bullish. This isn't bullish. It's a 2-year downtrend. Okay. It's a 2-year downtrend. Now, I'm bullish on metals in a recovery phase. In GFC, they recovered much faster than the markets, but they do have that potential. If they can't flip these key resistances, they're going lower, guys, when the markets pull down, because that's what happened in the GFC. Big banks had to liquidate metals. Most metals are paper traded. They're not actually holding these assets. It's easy to sell them. So if you want to see this go long, get above 24.27 and hold this area for support and move up. Okay. Then you're in a bullish situation in silver. Until then, watch this because you're printing a massive double top. And again, that silver target that I had down here is like 16.42. Okay. So you can go from $23, $24 to 16.42. So just look out for that. German 40. Again, high value targets. German 40 went down, also called the DAX, went down 74% in .com. It went down more than the S&P, which went down 50%, only defeated by the NASDAQ, which went down 84%. Okay. So this is interesting to me. This has Volkswagen, BMW, Mercedes, luxury car brands in here, 40 big German companies. And when countries hit recessions, which the Eurozone will hit a recession, the UK will hit a recession, the US is probably already in a recession. They'll tell us later this year that it started last year. Watch, they did that. It took 9 months after GFC had started for them to come out and say, oh, by the way, we're in a recession. Oh, yeah, by the way, the S&P is already down, 40%. But, oh, we're in a recession now. Yeah, we could figure that out. It's the same thing here. What you're doing here on the DAX, guys, you're back testing the base of your Wyckoff at 15,199. You had that wick up. But let me remove this so you can see something here, okay? On the DAX, you have the fib at 15,199. The best entry here, if you did get a little bit more bullish, is at 15,664, in my opinion, where I'd really like to look at this on short opportunities, maybe 15,4. But you have to also view this from this perspective. Selling climax candles is a daily time frame, okay? And you get more candles here day by day. Selling climax candle, looking for an automatic reaction, gives us our ceiling right here. And look what you're doing on the daily. Just simple Wyckoff, okay? You have your down thrust here, bounce back up. You're on top of your trading range. This is what I'm talking about. You see this all the time, Wyckoff playing out in equities, okay? You can mini Koff structures, larger Wyckoff structures like we have gold and silver, and you have this. This needs to pivot out. Pivot out to the upside. Then I'm looking at the 486 at 15.4 or the 618 at 15.6. Okay, again, Eurozone, 8.5% inflation, German inflation, and French inflation went up last year. But if this doesn't do that, what else happens on top of Wyckoff? Well, if you get a failed pivot, you come back up and you end up making double tops and you fall back into your range. You're also back testing your previous Wyckoff structure. Lots of resistance here, and you got a lot of supply dumped on this candle. But as of right now, you could build something if you wanted to, or I'm not interested in anything at this level. I want to see more weakness or more strength because I like these levels up here higher. Europe is behind us with the Eurozone funds rate only being 3% and 8.5% inflation. We're at 5%. So things could take longer to develop in the Eurozone. However, they move pretty close lockstep with the S&P. Okay, so when the markets turn down, you'll see this turn down. And you could end up getting a very nice double top structure if this thing dips back down, or if it just pops back up here, then falls down, okay? So you want to watch these larger macro structures. Looking at this on the French 40, you actually made an all-time high on your rally up, and you defeated your previous all-time high by like whatever I said, $10 or $15. Your 200's well below you. And this, again, if you squish the candles together, look on a 3-day chart, what are you really doing here? You're making a massive double top structure, okay? Now, I like this higher up as well. I like this at the 786 at 72.64, and obviously the higher the better. You're holding on at the 618 at 70.76. Your price is at 70.96. Here's your larger accumulation structure, which you came back down and back tested, okay? So I'm looking for a move. If this gets a little bit more bullish, and it may not, it could roll from here, okay? But you have the 70.76 as key support. But if you do get more bullish, that 786 at 72.64 would be an area I'd be interested because I think you're going to end up doing that move. I think you're going to have a massive double top print where if it breaks, you can look for an inflection point here, get a bounce up, maybe back test your ceiling and come back down. But the idea is following the US indices, you would be trading with the US indices and they would all be rolling down with the cycle that is at hand. And looking at NVIDIA, guys, put it short on NVIDIA as well, posted this in the room. NVIDIA pumped above my target here of, let me move that. Pumped above my target here in my trend base of the 1618. NVIDIA is trading at a 150 PE, I believe. 150 PE. Absolutely insane. People are super bullish on tech. Tech is cyclical, guys. Tech does horrible in recessions. But again, when I see people in the comments say everybody's so bearish, who? Who's so bearish? Yes, there's some individual institutions, individual players, influencers that are bearish. Overall, they've been piling money into tech. GameStop went up 40%. GameStop, okay? Barely profitable. You've had big pumps in the speculative tech, including Bitcoin, speculative tech, okay? Fintech. So, anyways, I like this trade up here for NVIDIA. It's had a parabolic rise. I think it's topping out here in this range. Could it go up a little higher? Yeah, I have the 2058 at 302. We'll see. Again, if the NASDAQ pulls down, doesn't mean an individual stock will pull down, but obviously can be a precursor. If the NASDAQ has a hard pull down, everything will pull down. But this hit, NVIDIA hit $111 in its October low. Okay, so this has a lot of room to give up on the daily time frame. Massive bearish divergence on your money flow for the majority of this pump. Okay, this pump up again, euphoric, fewer participants paying higher prices. Think retail, record retail inflows buying the dip. Look at the volume divergence on this rally as well. Okay, again, these are indicators you get for free when you join our room. Message Lee. and volume divergence on this rally as well. So this range, it got above the 1618. I want to see it come back down below it. And this may be something I build on DCA into as it declines, if and when the markets do start to roll over. 267 is that 1618 level. Price is at 272.5 right now. And of course, you have the lower levels beneath you. Looking at Tesla, Tesla loves to print double tops. Okay, you see this here? Double top. You see this here? You end it with basically a double top. You have a double top that's printing right here. I would want to see Tesla come back up to this range a little bit higher. But let's go ahead and pull a fib retracement and see where you got to. You might have got to this 618 looking at this, to zoom in. You did get to the 618 on a retracement. Let me get rid of this larger. Well, I need to show you that, so let's leave it. Let's go ahead and zoom in so you can see this. You got up to the 618. So a fib retracement from the high of your first peak down to your gully here, right? You got above the 618 and now price, it got rejected. You're building a massive double top here, guys. Tesla got down to $110. Remember this, a euphoric, people call us the king of meme stocks. And I love, I love Tesla as a brand, but it was highly overvalued. $313 is, oh wait, sorry, you got a lot higher than that. I had this squished in. I was gonna say it's above 400, so it was like 411, above $400. And if you look at this, when this comes to break down, you already hit 110. Okay, so this is an area, you could take I could take a little short here if I wanted to. I'm in NVIDIA, I'm in NASDAQ. I manage my trades very closely, so I'm leaving this one on the table right now. I'd like to see it get up a little bit higher, but it looks to me like it's topping out in this range, okay, for now. If the NASDAQ gets more bullish, or again, something happens, some outside news for Tesla, you could get a little bit more bullish here. But this area here between 197 and 201 has been providing some strong resistance, and we'll see if it holds. And if it starts falling apart, it's going to be when the NASDAQ falls apart. And that 1618 was already hit based on my fib wave projection of 110, okay? So the next level down, like at the end of this, when this thing's done, I would not be surprised to see sub $100 Tesla. You think that's crazy? Well, it got down to sub $100 Tesla here, got to 101 in January, okay? January of 2023. So this was $101. So when I say it can get below it, it can get below it, guys. And actually the 2058 is at $35. I would not be surprised to see Tesla end up at the end of this thing if it breaks down the way that way that I think it's going to see Tesla, I don't know, between $40 and $70, somewhere in that range. It could be an excellent buy. This isn't even something I'm that interested in trading. I'm interested in accumulating because I think it's an excellent company. So when this goes sub 100 again, I'm going to be looking at the levels. I'll be giving you guys updates because I'm definitely interested in accumulating this for the long term, the long hold, the long recovery process. And the thing about these prices, remember, you have to go back to 2020. Okay, look at this parabolic rise. When people say Tesla will never go that low, pre-pandemic, okay, pre-pandemic, the high here in the range was $64. If everything, remember, rule of thumb, everything's going back down to pandemic lows. Your pandemic low was $22. The stock went up over 400 to over $400. So yes, it can easily get to that target of $35. Maybe not easily, but it can get to that target realistically because it was below that target just 2 years ago. Okay. So that's part of the cycle that we are trading in. Things will happen that people will not believe until it happens. And guess what? Then it is too late. Super long video. Like, subscribe. I'll check you guys next time. Appreciate your support. Take care, everybody. Have a good day.